Hello, folks. Welcome back and Happy New Year. Well, you finally made it to 2026. Now, what are you going to do with yourself? All right, so I'm going to talk a little bit, and it's going to have to be short tonight, okay? Because I have things I have to take care of, and I have a lot of things each day on my schedule. So I don't know when I'm going to get to the next installment, but I will be back to live streaming on February 10th of this year. So that way you know what's going on. The first book will drop in June of 2026. I will give you information on the website so that way you can get your hot little hands on that if you want it. Don't buy it, by the way. So today is January 1st, 2026, and this lecture is going to be referring to From Vision to Execution, Simplifying Your Process. Now, obviously, a lot could be said about simplifying things, not only from my own life's work, but from trading in general. And we get inundated a lot with what we can and can't do, what we should and shouldn't do, who should we listen to, who we should not listen to, what's hot right now, what's not, that type of thing. And I have been obviously centerfold really for a lot of that discussion over the years. It's too much information, it's overload, it's complication. It's not complicated, okay? And but I understand if someone looks at the entire compendium and thinks to yourself, wow, like where do I begin? What do I do? It's just too many things. And I'm going to try to talk to you with inspiration tonight, so that way you can go towards you know pressing into this idea of finding your way with my concepts, making it yours, making it something that is easy, something that's not overdone, if you will. Okay, we're not trying to look for a kitchen sink approach. We're looking for something that has one or two, maybe three moving parts, and at most uh, one market. And if you can do that, I believe that you'll have a greater advantage over than, say, someone that wants to try to go through my content or use another school of thought and trading and try to apply everything that's available. I think that's a problem. I made that same problem when I was a new startup and when I was 20 years old, which is a long time ago, by the way, folks. But let's get into it. I could go on and on and have a big monologue, but I know most of you are already getting bored. So I want you to think about how many times, and you may not realize it or not, but think about it. You as a speculator, you as a trader, you as a developing student of the markets, you're effectively trying to cast a vision over the future of these individual candlesticks, where they're going to go, where they came from, why they did what they did, and why and what time they're going to do what you're hoping will yield in terms of profit. You don't have control of the outcome. You don't know what the next candlestick's going to bring. You don't know if there's going to be a sharp reversal. You don't know if the price is going to stagnate. And those are uncertainties. But for the ones that's been here for a long time and have found their groove, if you will, these charts tend to have a rhythm, has a pattern, a pulse that you can tap into. And it's kind of like a knack. And I just chalk it up as experience because you get a feel for what it's trying to do. Now imagine not knowing where the market's trying to go to and how hard it would be to get in sync or in rhythm with price action. It'd be next to impossible, which is the reason why I teach the first primary function of learning how to read price action is to know where it's likely to go to. Where is it drawing to? And once you have a understanding of what it might be reaching for, then all these scenarios will start flooding your mind. Now, as a new trader, a new student, someone that sees all these things that I've made available to you, and you think, wow, I'm going to reach into the toolbox. I'm going to use everything today. I'm going to use commitment of traders. I'm going to put a seasonal tendency in there. I'm going to look for that Judas swing. I'm going to wait for the Model 22 to form. And heck, I might even go in there and do a silver bullet or two just for added pleasure. Well, truth be told, my veteran students that have been pulling millions out of the market, they have adopted a mindset that they're not trying to figure out what the next two or three price runs are going to be. They're just looking at price right now, and they want to know what is it likely to do at the very moment. If there's nothing to do, it frees their mind up, and there's no worry, there's no concern, there's no fear of missing out. It's just simply there's nothing for me to do right now, so I'm going to disengage and relax. Now, experience will dictate whether or not there's an opportunity. And if there's an opportunity, then they can cast forth a vision. What you think the market's trying to do, how it will get there, is the vision. Now, you may or may not realize it, but that's what every trader does. And I find it amusing when they say, your job as a trader is not to try to predict the market. Oh, what do you think you're doing? What do you call what you're doing? Otherwise, if you're not doing that, you're gambling. I mean, there's no way around it. You're gambling. So I want you to think about how casting a vision, what you think price is going to do from the moment you're looking at, which is market price. Where is it going? That's the draw on liquidity. Now, the experience factor separates those without it from those that have it at this juncture in the conversation. It will be frustrating for some of you that are brand new. It will feel like it's disjointed. It will feel like there's something being held back or it's a waste of your time. As soon as you start feeling that way, if you're brand new or if you're relatively new to my stuff, turn the video off, make a note of it in your journal that you'll come back to it with 3 months experience. And then come back in 3 months and watch this. If it doesn't feel like it's resonating with you then, come back in 6 months. Okay? I promise you, inside of 6 months, if you're doing everything I've taught on this channel, it will make much more sense to you then. But it's normal for you not to feel like it makes sense when you're first looking at it because your assumptions are you watched a video, so therefore you must know. And that's not how this works. So let's consider the NASDAQ here. And obviously, if you're looking at a price like this and you're new, a neophyte's perspective on this is, wow, that's a big drop. If I could only have seen that coming. Or others may have seen, wow, this is a pretty nice run up. I wish I could have went long there and got out before it reversed. When I was younger, I was thinking, I wish I could get in there and take every single position available and add, going long here, adding here, adding here, adding here, adding here, adding here, adding here, and then eventually getting stopped out and treat this as a mega trade where you just milk it and take the majority of it off. And then I went into speculating with larger amounts of money, larger risk, and I started thinking to myself, it's better for me to pick my shots because losing money is never fun. But when you're losing more times than you are winning, even if you are profitable as a new trader, it feels counterintuitive. It feels like you're just not doing the right thing despite making money. And the idea that enters your mind is that you somehow are just getting lucky and eventually the inevitable is going to happen. You're going to go into a tailspin, go on tilt, and blow the account. And as a 20-year-old, I did that a lot. And as a new trader, you're going to do that a lot too until you wrestle yourself and start bringing your focus back to casting forth a vision. That means knowing where the price is likely to go next. And if that's not clear, you do nothing. You do nothing. And it's very liberating when you can accept the fact that there's going to be times when you're not going to know. That's the reason why I stopped trading around the holidays because it gets very thin. The markets tend to be a little unruly, like spoiled brats. They'll run farther than you want them to when you don't expect them to. and it feels like guesswork sometimes. Not all the time, but sometimes. And I demand the market to be Swiss precision level delivery, or I'm not engaging. Now, for someone that doesn't understand what that means, it sounds like, well, that's very narcissistic. Like, I do know. And you can learn how to do this as well. You'll be able to pick up on the rhythm and you'll know when you should and shouldn't. But the main thing is you have to first start by understanding where the market's likely to draw to first. So I'm going to show you this here. This is Tuesday, December 23rd, 2025. 1 minute candlestick at 9:54 a.m. Now, why am I picking that one? Well, what you're looking at is a pair block run right out from Jump Street. So at 9:30 in the morning, they just ran it straight from there. Created a short-term high, rallied above it, false break above that, and turtle souped it right back down into the initial run. That shift right there, below the swing low in here, that displacement is significant. Go back over your NASDAQ chart and you'll see that this short-term run here stands out on your chart. So when I'm looking at price action where price has been made jagged, like it does here, I don't need it to take out that low. I just need it to show me these types of fair value gaps. So when they stand out in price action where price has had a turtle soup, a major displacement, or it just leaps out at the chart, zooming out, not zooming in tighter, okay? By zooming out, your eye will jump right to these types of swing highs and swing lows. And when these runs are occurring, there's lots of manipulation in that. And you're going to be best served by going in and looking for these types of imbalances when they first form. Notice there's no fair value gap here until that, after it took that high. So this PD array is first present a fair value gap after turtle soup. Now this can be done on the buy side. This is a sell side. So what we're looking for are standouts for fair value gaps. And it's a lot of times you've probably seen it when I allow people to leave comments. And it's a love fest in these things on YouTube most of the time, but usually I'll have 3 or 4 guys come in here and try to be a clown. And whatever, you're welcome to your opinion, but I'm not providing a stage for that type of stuff. But the comments that come up a lot are, why did I pick that fair value gap in that respective video they were commenting on? And over the years, obviously, you're seeing now there's a rhyme and reason to what I'm doing. And it's a slow drip, slowly, disseminating the information because there's a lot of people out there repackaging my stuff. I'm not repackaging anything else. But that's the excuse that they're trying to put out there, that I'm repackaging something else. And it's simply not the case. I want you to think about how what I just said about here. When you have a turtle soup sell off, buy side taken, it starts to sell off, you don't need this to be a market reversal. You just need it to show these types of characteristics. The first fair value gap that forms after that, keep that on your chart. Project that forward. Think about the up to data ranges. What's the lowest one? 20 days. Keep it on your chart for 20 days. That's why this is still valuable to me. Now, by projecting that forward in the future, I'm already ahead of the curve. And I know this level is going to be important well before your volume profile is populated on your chart, well before your Elliott wave stuff shows up on your chart. I'm in the future right here. I already know this is going to be a viable level in the future. Now I just simply have to wait for time to agree and meet with that price. What does that look like? Well, that's the high of that run. You're cherry picking this guy. If that's how you think, move along. It's okay. It's not my aim to try to convince all of you. Okay. But that's what that level is. And I want you to start collecting them on your charts. And this is why having one market and being a specialist is important, because when you ask me, what do I have written down on my little notepad? The little notepad I keep next to me. It's things like this. And because there are some things on there that I don't want to teach yet, I know thousands of questions will pop up as soon as I show you it, and I'll frustrate you because I won't answer it. I'll ignore it. I'll put you to the side and disregard your comment. And it's meant to manage the information before I release it in book format. Okay, so it's simply allowing you to understand for free here. So now you don't need to worry about that in the book. It didn't cost you anything. You're just watching it for free here. But you're looking for the first presented fair value gap after a turtle soup sell off or sell side liquidity raid and runs higher. So having these on your chart, again, you can collect these in a workspace on TradingView or whatever your platform is, or you can be old school like me. I just simply write it down. Now, that might not be helpful to some of you because you're high tech. You want to see it, push a button, it populates on your chart, and it does everything for you automatic. And I can see the advantages of doing something like that, but I just like to know why I'm using it, where it came from. I have my hands on it. So I prefer the high touch over high tech. And that's the old dinosaur in me. I'm an old head when it comes to things like that. I'm never going to change. I'm too far gone in the game, and I don't have as many years behind me as or ahead of me as I do behind me. So I have to be realistic about things, right? So that's the market reaction there. Now, right away, you should know the opposite of that. It was a nice little rally all the way up in here, and overnight, here's your lows. So cast forth a vision. If it's running quickly up to that level and it proves to you it doesn't want to stay there, it starts to sell off. And then we're entering the time of day when we're looking for the opening range, 9:30 in the morning Eastern time to 10 o'clock. We're looking for that first presented fair value gap. That's that right there. Now, right away, you can see it's using it here and here. And where do you think it's drawing to? Before this even formed, before 9:30 even happened, while it's dropping down, in your mind, you're going to cast forth a vision. This is what I do. I'm looking at the market and I'm casting forth a vision. I'm waiting for a price run that creates a long, protracted down close candle. I'm waiting for that to form. I'm anticipating that to form because I know all of this reaction from this run here is likely